We're glad to have you back. The Central Bank of Nigeria has raised the interest rate by 150 basis points from 24.75% to 26.65%. Senior reporter Ademola Lawrence reports.
The Monetary Policy Committee, MPC, of the Central Bank of Nigeria, CBN, held its 295th meeting on the 20th and 21st of May 2024 to review recent economic and financial development and assess risk. The bank's Monetary Policy Committee, MPC, agreed to increase the monetary policy rate, MPR, for the third time straight to rein in the country's soaring inflation level, pegged at 33.69% in April 2024.
The key focus of the MPC at this meeting remained to achieve price stability by effectively using tools available to the monetary authority to rein in inflation. Members observed that while year-on-year headline inflation in April 2024 rose moderately, the month-on-month measures of headline, food, and core all declined significantly.
The CBN governor acknowledged the rising inflation levels in the country. He said the key focus of the MPC meeting was to achieve price stability by using tools available to rein in inflation.
Recent tight monetary policy stance of the bank is beginning to yield the desired outcomes. Gentlemen of the press,
Drawn the circular following the president's directive.
as bankers to government, as the federal government amended its position, we have withdrawn the circular that we issued to the various banks. There was a need for us to take a breather and see how we could work with the different players there to strengthen regulations, not by any means to throw them out of business. And let me emphasize that as at this point in time, we have not revoked the licenses of any of the fintech organizations, many of those players, we have not.
The next Monetary Policy Committee meeting will hold on July 22nd and 23rd, 2024. Ademola Lawrence, TVC News, Abuja.
Yes, that was on Tuesday after the two-day meeting. Well, let's get some perspective on this conversation, and I'm being joined by the Head of Research and Strategy with Chapel Hill Denham, Mr. Tajudeen Ibrahim, a friend of the house. Mr. Taj, it's good to see you. Good afternoon.
Good afternoon. Good to see you too. And thank you for having me on the show today.
Yes, the CBN governor is harping on the fact that the focus is price stability and, of course, to try to rein in on inflation. First and foremost, let's start our conversation this way. Did you expect another hike following what we've seen around inflation?
So, absolutely, at Chapel Hill Denham, we were expecting around 150 basis points to 200 basis points hike in the policy rate, for the last meeting. And the reason we were expecting that much in terms of the hike is because of the sustained inflationary pressure that we have seen in the economy on a year-on-year basis. And so when the authority announced 150 basis points, it came in line with our expectation of 150 basis points to 200 basis points. Nevertheless, there is one key takeaway for me in the numbers, because if we look at our inflation, we are at 33.69%, and the 26.25% policy rate is still below inflation. So, which is somehow a form of concern to investors, in my view.
Well, the impact of this hike, now 26.25, can you help us understand what it means for the real sector, for the business people? Because they are talking. LCCI came off today with a release talking about this rate.
So I think the way to understand, the results or the outcome of this MPC meeting, in line with, the transmission mechanism to the broad economy, is to look at the indicators on a month-on-month basis. Let's take a look at inflation on a month-on-month basis. It has, dropped for 2 consecutive months as we speak. Inflation was down month-on-month in March. It was down also month-on-month in April. And one key message that is passing to, policymakers and also to Nigerians is that what the CBN is doing is working, but it is working gradually. We are not going to see the results overnight because we did not get into this situation overnight as well. So it will take a bit of time, for things to begin to look favorable in terms of the results, on the economy. We have to check two other key indicators. Number one of such indicators is money supply. Money supply was down in the month of March, month on month, by about 3.4%. At the same time, credit to the private sector was down by 12% month on month. Credit to the government was down by a huge amount of 42% month on month in the month of March. So what all these numbers tell us is that what the CBN is doing in tightening monetary policy by raising interest rates is working. It will only take more time for us to see the full impact. We have seen 2 consecutive months of moderation in inflation on the back of the moderation in money supply, moderation also in credit to the economy. So we should, watch out to see, how this plays out in the next couple of months. My suspicion is that month-on-month inflation most likely will remain tame over the next couple of months.
And now that the CBN has come up with all of this, in some cases unorthodox, right, policies to address this challenge that we face, many would say the fiscal side must to play their own part. And my question really would be, what specifics are you, as you're somebody that understands the environment, what sort of policies, what sort of discussions, what sort of conversation are you expecting really at this time? Or what sort of policies are you expecting from the fiscal side that will help complement this? We heard today that BDCs will also might have to get their registration done again. All of this, many say, is affecting businesses and all of that. What should the fiscal side do to complement the monetary side at this time?
Okay, so for the fiscal side, I think that is where the bulk of the work lies, and that is where the bulk of actions that, if taken in the right way, we will see the impact on the economy. The impact will reflect positively on inflation. One starting point to my view is for the government to ensure that they cut down the cost of governance. The cost of running the government should be as low as possible. That is when, even the government is tightening its own belt. You cannot be the fiscal authority and you tell Nigerians to tighten their belts while yours is loose. So we need for the governments to ensure that they tighten on their, costs, just so that, they are also cost efficient. Because if they do not tighten, their cost or manage their costs better, what it means is that we are going to have unproductive spending in the economy. When we have unproductive spending in the economy, inflation is not going to come down anytime soon, no matter how much the monetary authority raises interest rates. Away from cost management and cost efficiency, I think what is also very important is for the government, the fiscal authority, to have a long-term view around investment. When we have a long-term view around investment, we will be investing today to consume in the future. When we invest today, what it means is that we are building the right infrastructure. It could be, road. It could be, other infrastructure. It could be rail, and all those elements. When we build them today, what we are doing is that we are preparing the future ready for a much lower cost of doing business. The cost of doing business will remain high in the future if we do not invest today in the right set of infrastructure. Talking about the power sector, for instance, we should invest more in that sector, invite the private sector, free that sector from any form of bondages that is to be in as we speak. Let us have investors that will liberate that sector and allow it to grow. When we allow that, we are investing for the future, and the future of doing business in Nigeria will be a lot more interesting, because when we have power, it means the cost of doing business should moderate, because you have to depend on power, which is much cheaper as a source of energy compared to you depending on diesel, which we all recognize is very high. So BDC operators, another point you have brought up there, and I think one key thing we should bear in mind is that there is need for the CBN to clean the foreign exchange market. One of the steps to ensure we have a much efficient foreign exchange market is what the CBN has taken by announcing that all BDC operators should reapply for licenses. As we speak, we have well over 4,000 BDC operators. How do you expect the CBN to be efficient in supervising those over 4,000 operators? How do you expect the CBN to be able to manage all the dollars that they sell to over 4,000 operators in the market? We need consolidation. We need fewer operators that are a lot more efficient and deliver value for Nigerians as a whole, in my view.
Back to these figures that we have, what is in this for the financial institutions? We still see them coming up with beautiful figures at the exchange, paying dividends, smiling to the banks. What does this mean also to them, to their operations?
Well, I think for the operations of the financial services sector, it is broadly, consistent with what they should be doing. If you are looking at financial system or financial services companies as we speak, elevated interest rate is positive for them, particularly the banks. In this case, many of them have been writing their customers, advising them of higher interest rates on their loans, because even it is costing them more to get those deposits that they are converting into loans. That is one. Two, higher interest rates on fixed income instruments is also positive for the banks. So if you are an investor and you are looking at the banking sector, this is one of the periods that you are going to benefit from your investment, because their earnings are going to rise on higher interest rates. So we all pay interest rates in the economy. Let us also enjoy forces of those investing in the banks. I think that is one way that Nigerians can also take advantage of the current environment, instead of just being negatively impacted by paying higher interest. You also invest in banks for higher dividends in the nearest future.
Mr. Tajudeen, I would always like to touch on the FX market. Anytime we have a conversation this way, I always like to look at what's been happening in that market, following all that the CBN has done. And we even seen some quarters that the CBN is even trying to still defend the Naira one way or the other against the greenback. But as of today, I think it's at about 1,400 in the other market. And also the IRE window, I don't know what the rates are today from the FMDQ. But what really do you think is still responsible for this flip-flop that we have in our foreign exchange market? And how soon are we going to get a bit of stability with regards to the disparity?
I think one thing that we should all bear in mind is that we have a market in this case, and the foreign currency market. One of the key dynamics of market is that the market plays alongside demand supply dynamics. So we currently have a case in the foreign currency market where demand is above supply. When you have that kind of a situation, you would see asset prices going higher. So that is the reason we are seeing higher exchange rates at the FX market. There was a time that we had more supply than demand. That was in the month of February and March. So for those 2 months, the naira was a lot stronger than the dollar. So, but this time we have the reverse, which is part of what happens in markets, because markets should be free for investors, participants to go in, and they should also be able to exit freely. So foreign investors have been demanding for dollars in the FX market to test the liquidity, transparency, and efficiency of our FX market. That is what is happening. When they are satisfied about the fact that they can easily take out money out of the market, then they will come back. But coming back will require higher interest rates. So that is what is happening in the market. By the time supply increases, the naira is going to bounce back again. It is not sustainable for the central bank to manage the currency because that is not the best strategy. Whenever there is need, they may intervene in the market, but the CBN wants the markets to find its direction because it is a market of willing buyers and willing sellers. But to get this right, we must ensure that we are transparent in the market. We must ensure that the market is free for investors to come in and exit. We must also ensure that we have substantially attractive interest rates on our fixed income instruments, on our money market instruments compared to what is obtainable in the US and other advanced markets. When we have that kind of development, most foreign investors will come back to this market.
Pension now, almost finally, is what we also have in the PMS that's talking about the oil and gas space at the moment, where we know that PMS, many say, should be selling more than the amount that we have at this time. But my question really around that would be, will this not thwart the positives of the PIA? Or what do you think this means moving forward? We are supposed to open up this segment of the market, the downstream, but at the moment, government is looking at it like there must be an intervention. Side by side, can you just put this together and make us understand what it means for the market?
Well, I think what really matters is how do we get our PMS? Are we importing? Which is, what we currently do and rely on as we speak. And this is where Dangote refinery, comes, into the picture, and also the state-owned refineries as well that are currently being, sort of refurbished. So I think, what we should expect is, for us to wait till the month of June. Let's see how much Dangote is going to sell PMS. So if it sells at prices below the current prices, then I personally would say that the local refining, relying on local refining is working. But if Dangote comes and sells above the current market price, then I think it is not working, and that is not what Nigerians want. What Nigerians want is to ensure that local refining capacity, we are able to take advantage of it and have much lower, PMS prices in the market. When we have that, we are even going to see the positive impact to play on our inflation in the country. That is where the government should be focused on and ensure they deliver on that objective of much lower PMS prices. Not because they are of subsidy, but more of because we are sourcing this PMS now locally and not depending on imported products, which has a major negative impact on our FX reserves, negative impact on our trade balance as well. Those are my views.
Global economic issues, let's wrap up on this note, geopolitical tensions and others are things that we would also have to look at. And of course, the central bank also alluded to some of this and the impact, of course, on the expanded economy. What impact would they have, particularly, I'm talking about all of these issues, on countries like Nigeria and maybe other developing nations moving forward in 2024?
So if we look at all those geopolitical tensions, what they speak to largely is around, a commodity like, crude oil, for instance. So the prices, what they should ensure happens is that we take advantage of that. We produce, more crude oil. so that when we sell, we benefit from the higher prices globally. In terms of domestic consumption, it may be negative, in terms of prices, but we reckon that the government has the capacity, to sell crude oil to oil refiners in naira. Why not consider that? Just to ensure that the impact of global volatility in prices, does not affect Nigerians. That is one thing that I think the government can do. Protect your people, protect your citizens, but sell outside externally at dollar rate. But internally, look at the possibility of selling in Naira to cushion the impact of the global rising, rises in prices.
Head Research Strategy, Chapel Hill Denham, Mr. Tajudeen Ibrahim. Thank you so much. Do enjoy the rest of your day.
Good to.
Well, interesting.